Hello, welcome back to Mining Network. I'm with Dan Major, the CEO of GoviEx Uranium. Dan, good to see you.
Thank you very much.
Kick things off, brief overview.
GoviEx, uranium development company, 3 projects, Niger, feasibility study completed, currently looking for financing. Zambia on its way to complete its feasibility study by the end of next year. Mali, much more of an exploration play, kind of third in the line.
Okay, and just very briefly, capital overview in terms of market cap, shares outstanding, that sort of thing.
Yeah, about $145 million market cap. There's about 600 million shares on issue. Just done a recent raise, so we've got about $7.5 million of cash.
Brilliant. Okay. All right, let's have a look at the assets then. Obviously, the main focus at the moment is in Niger. Could you talk us through, you've just done a feasibility study on that back in September. Run us through the highlights of the numbers and what we can expect.
Yeah, I mean, you're looking at a long life project here, producing about 2.6 million pounds per annum. It starts with the open pit. The all-in cost is $28 a pound, excluding the royalty, because it's based on the uranium price you put on it. It's robust. It's got an NPV of 140 and an IRR at 13.5%. But it's such a long life project, I don't think those really represent. What I think is more representative is just over $82 million a year of EBITDA consistently for that life of project. So, well, it's got renewable energy built into that as well. So we've done a lot of stuff on the ESG side of that program. Target now is to secure the financing for it.
You're fully permitted. You're now up to a bankable level, I assume, that study. What are the routes that you can go down? Obviously, equity is one side, but it's for CapEx about 340 million, right? So obviously equity, hopefully some part. Is this a financeable project in terms of debt? Is there more royalty that you can add to?
I'll tell you that towards the end of next year. Look, Endeavour Financial have been appointed as our debt advisory. We're currently in the process of, sending out the teasers, getting the responses back, and we're gradually pulling together a pool of likely lenders, export credit agencies, DFIs that are kind of pooling together at the moment. On the basis of that group, we'll then take them to the next stage, which is going through their due diligence process, getting their letters of credit, letters of interest, and then moving forward to there. At the same time as that, once we get the flow of the debt side, we'll start working more on the offtake side as well, because we need that underpin of pricing to go against the project.
Well, I want to talk to you about offtakes, because you're in a unique scenario where we're seeing a lot of sanctions or a lot of rules and regulations with Australia and Canada around who they can sell to. Obviously, you don't really have that limitation. What can we expect in terms of offtake? I assume this puts you at a bit of advantage being where you are, right?
Well, it does. I mean, I think the one thing that's very clear talking to the utilities is they're looking for diversity of supply. A lot of them buying from Kazakhstan or from Russia on the final product, and they're now looking at that and saying, well, we can't just keep buying from the Canadians and from Kazakhstan. We need other places. And you're absolutely right. We don't have any restrictions. We still have the safety issues that apply. Niger is signed up as a country to all the safe practices. But it does mean we can ship to China. We can ship to Canada, the US, Europe. So all of those jurisdictions within our scope, and as you point out, there are restrictions for Canada and Australia shipping to China, for example. And given that China is one of the largest growth areas for nuclear generation, being able to sell to that customer base is quite a useful thing to do. I think the other thing that's quite good for us is where we're positioned. There's a steady flow of material that's been coming out of Cotonou since the early 1970s. It's a well-trodden path. It's well understood by the shipping people out there. It's well understood by the utilities. So that ability to get out to Convidine, to Cameco, to Comorex, get into the standard book transfer process, very important.
Okay. You're moving into this period now where you're sort of financing and potentially construction. In Niger, can you just give us a bit of a flavour of what it's like to operate there, and how much support are you receiving from the government? What's the stakeholder relationships like?
Our government has been really supportive for a long, long time. I mean, we started working in the country in 2008. Started drilling on August the 8th, 2008. Very auspicious, 888. So, but no, I mean, we've had a really good relationship. And that's because we've put the effort in as well. We communicate with the government. We closed out our transaction with them in 2019 where they got a 20% stake holding in the company. 10% of that is free carried. They've been very supportive. And part of that is that Cominac mine is closing in Arlet. So they need a new project to replace that flow of uranium and those jobs that are up there. So yes, it's been really good. Working in Niger has not been an issue. I mean, so we started drilling back in 2008. We've never missed a field season. I have 100% Nigerian team out there. Don't require anything else. We support local on everything we do, whether it's procurement and employment. We have a robust stakeholder engagement program and have had a long time a strong CSR program supporting the communities around us.
How does the logistics look in terms of getting the product out of Niger into, I assume you'll have to go to a port or?
Yeah, we'll do basically what Orano or Riva has been doing since the early 1970s. The Nigerian government or the Nigerian state owns the transport company that actually transfers the material from the mines to the ports. That goes out with a military escort the whole way. In fact, the Nigerian army actually goes all the way through Benin to the port of Cotonou, and that's the way it's been operating. So it's well understood. It's well, flowed through. We can deal with Orano because they have a logistics arm as well, or we can use some of the others that are out there. So that's the one thing that's really positive about that as well, is that there's no complexity in that. We can actually just take what's already a rubber stamp process and just match in with it.
And how much infrastructure do you need around the asset itself once you do get this fully financed?
Well, most of the infrastructure's there, which is the other good thing about it, because of course Orano have been there for since the 70s. So the road is there, the power is there. There's two towns, Arlet and Akokam, with about 200,000 people living in it. There's a power line that goes straight past our property to a substation. It's about 10k from the property. We'll bring power back off that, but we've also included about 8 megawatts of renewable as well. Yeah. So it gives us about 26% renewable energy. We've also put in a diesel backup as well. Water's not a problem either. We hit water 40 meters below the surface. So everything you need to set up a mine is there. And with Orano having two mines, with Cominac closed and Somalia due to close sometime in the next decade, there's a well-trained labor force that's already sitting there as well. And all of those, it's not just about taking uranium out, it's about getting all the supplies in. So all of those components exist as well, of bringing products in, reagents, steel, all of those things. There are Nigerian construction companies as well. So all the things you need to set up a mine are present.
Let's take a step back actually. Can you just remind us of when this is in full scale production, how much uranium and how much molybdenum will you actually be producing from this mine? What, in terms of?
Yes, so it's 2.6 million pounds per year for 19 years. That's about 55 million pounds in total. Okay. But that's just the resource that we know of. Yeah. We stopped exploring back in 2010. We got 4 licenses. We're the up dip section of Cominac mine. But really, we already had over 100 million pounds of uranium at Madaouela, so there was no real reason to make it any bigger until we'd kind of got it up and going. So this could go a lot longer than that, or could be scaled up. And molybdenum's relatively small. It's kind of like 450 tons a year.
I guess in a global sense, what is there a breakdown in terms of is it a couple of % of the global production?
My global production at the moment is 123 million pounds. So
Okay.
It's a relatively small as a percentage of the global production.
So it's not something that's going to flood the market?
No, absolutely not. But it's big in scale of a uranium project.
Yeah.
But there are some of the big Athabasca ones are a lot bigger.
Okay. Let's take a step and have a look at the uranium market at the moment. We obviously saw a few ETFs, one particularly from Sprott come in earlier in the year or last year, that we saw a bit of price volatility. I think it's calmed down a bit. We're now floating around the $50 mark at the moment. Can you, from your perspective, obviously you've worked in uranium quite a long time now, where do you see this market going over the next couple of years as you enter production?
Look at UxE's forward curve. I mean, by 2025, 2026, they got $66 as their medium number for where uranium should be. I think, again, you've got to be careful with, the long-term contracts, short-term contracts, but also, have a look at what the rest of the market is doing there. And you've got to remember the impact on the uranium market from the Russia and Ukraine issue and the sort of self-sanctioning that's going on there has negatively impacted the downstream part of it. So your access to enriched product, the EUP, your access to UF6, this is where the real impact has come through. It hasn't really filtered through all the way into the U308 market. We are in a deficit. I mean, we're 190 million pounds consumed, 123 million pounds produced. The rest is being filled by drawdown of inventory or secondary market supply. So what you've seen, I mean, if you look back in 2016, 2017, the conversion for UF6 was at $4. It's now at $40. You know, about a year ago it was at $15. So people are worried about where they get their short-term material from. And you're now starting to see utilities move back into the U308 market, saying, right, where am I going to get my long-term material from? You know, because it takes 2 years for U308 to get through to a fuel rod. So there's no panic yet for that. But what you are finding is most of the utilities have a gap in their book from 2025 onwards that they need to fill. And yes, some of them are sort of going to the Camecos of this world and say, look, can you fill my book? Because I know you're going to be there. But more and more, we're getting support out to the developers to say, look, we still have a supply gap here. It needs to be filled. We need diversity of supply to come through. So yes, you know, the other thing you're seeing has been a steady drawdown of inventory. I think there was one concern always was Japanese inventories, but with Japan changing its approach now and building, all of that inventory is off the line. I think it was interesting that about 4 or 5 years ago, UX Consulting came out and said, look, there's 1.4 billion pounds of inventory, and there was a lot of concern about its mobility. Their most recent report basically said, yeah, I mean, the inventory is lower than that, but now none of it's mobile. It literally is locked up. So you are going to see uranium prices definitely pick up, and you're already seeing an increasing amount of RFPs come to the market. So we have seen contracts up as high as 58 already.
It sounds like it's more of a supply constraint market at the moment, underinvestment into the industry for a long time.
Yep.
Can you talk to us a little bit about the demand side? Because you mentioned earlier that China is growing in demand. What's the demand forecast looking like at the moment compared to?
Yeah, that's a good one, because actually I was talking to Trade Tech the other day, and they just kept changing the numbers up.
Yeah.
And I think let's look at it more from a sentiment point of view. I mean, China is already on this rapid growth forward. I mean, we're at 57 gigs. They're looking to be by 2025, 70. Another 10 years after that, 140. You've got expansions going on in Saudi Arabia, UAE, Pakistan, India, Bangladesh. South Korea has done a complete U-turn as well and is now building reactors. Japan has gone from really struggling with its reactor mentality. Its sentiment of its people has changed from a sort of 40-60 to 60-40. So you've seen that change. You look at Europe and what's going on here in the UK. Yeah. I mean, we've gone from kind of neutral to doing nothing to 2 days ago announcing £700 million investment into sizable C. You've seen Europe. In the case of France, that was looking at going from 75 down to 50, is now back up to 75 full time and wanting to expand. Eastern Europe, I mean, Holland coming out and saying it's now going to go nuclear. And a lot of those have been supported as well by the development of the SMRs. So the small modular reactors are becoming to the fore. And I think that's where Rolls-Royce particularly, which the government has been backing here in the UK, is key, because they're using older technology in a new form. So they're driving. And then, look at the developments in the US. Reactors are getting pushed out to longer lives. A lot of funding support to the US reactors as well. So it's a combination of reactors getting to last longer, but a lot more new development and a lot of fast tracking for the SMRs, which aren't in anybody's schedules at the moment. Yeah. So yeah, I think we're going to just keep seeing. Looked at it 2 years ago, it was 2.6%, compound growth. It's probably getting closer to 3% now. Well,
I think what's quite interesting as well, we just saw the Canadian government come out and actually tie uranium or nuclear energy to net zero and green energy, which is really a good positive. Obviously, we've got all this going on in the background, but the idea is you can find the financing for the Niger asset, bring that into construction and production. In the background, though, you do have another asset in Zambia. Maybe you could just run us on that, because I think the idea is once the Niger asset's in production, that'll be the next one to construct.
Yeah,
right?
Muntanga is actually permitted as well. Yeah. So it already has its mining permit. We're actually redoing the environmental permit, because the previous one was to Zambian standard. But obviously, if we want to finance it, we want to go to an IFC. So we're redoing that program at the moment. We're targeting to complete its FS by the end of next year or early the following year. So our drills are out there just doing some infill drilling, getting the met samples out. So that's aggressively pushing forward. That's another really nice project. It currently produces is targeted to produce £2.5 million per annum for 11 years. Again, it's a project that drilling stopped on it back in 2013 and just said, look, £60 million here. Make that work first, and then we'll figure out. There's a lot of exploration upside there.
Is the infill drilling that you're doing at the moment, is that just to essentially give more confidence to the permitting that or the current feasibility? Are you expecting a larger resource from the infill, or?
Well, let's find out what the number comes from. I mean, the drilling has been good.
Okay.
I mean, we did put a press release out early on just to show that it's certainly stacking up, potentially, deeper and wider. But until we pull the resource model together, I've learned in this business, never guess what the resource geologists will do.
Sure. Have there been any other economic studies on this? Obviously, you're saying you're moving to feasibility study. Has there been a PEA or a scoping?
Yeah, no, absolutely. We did a PEA in 2017, but that was based on 2 PFSs that had been done before. So we acquired the assets from 2 different groups and then put them together. One of those groups, Denison, had added a resource which was in the inferred category, and that's why it stepped back to being a PEA. But all of the metallurgical test work, the engineering design had already been to a PFS. So stepping from PEA to FS is doable for us now. We can step through one of those stages.
What are the next steps for this project in terms of the permitting? You're saying you need to get it up to IFC level. What do you need to actually get there?
Just get the environmental certificate renewed for that one. So it's got its mining permit. We just need to redo the environmental side of it, bring it up to an IFC standard, get that permit reassigned for the total project, because it is different to the original one that we had because we've added this extra deposit. So we do have to go back to the Zambian authorities and say, well, yes, it was permitted, but that was these 3 deposits. You now have this 4th large deposit, which is really big and needs to be added into the permit.
Okay. Does this also help with future financing as well, do you envision, in terms of getting this up to the IFC standard?
Yes. I mean, we do everything to an IFC simply because that's what the banks will require from a lending perspective. If you don't have an IFC standard ESIA, you're not going. And that relates back to the off-takers as well now, particularly the European off-takers. Some of the very large off-takers in the US are requiring stronger, more stringent ESG requirements of you to go forward. In fact, some of them are now starting to look at their Scope 1, Scope 2 and Scope 3 carbon emissions as they try and become carbon neutral, particularly the US guys. And so therefore anything you can do to change your own project helps that. So it has a flow across the whole impact of what you're doing. What
can we expect material sort of announcements over the next, say, 12 months that the market should be looking at?
Yeah, if you're looking at, obviously we're in a kind of long haul process. It's not like a drilling company now knocking out drill results. First thing will be in Zambia will be the updated resource to come out of that. That will give us a guide of where we're going to as well. Early next year in Niger, we should start having a much clearer view of who's in the lending pool. We'll be then gradually working on the offtake side with utilities. So depending on how we can report those, then those will go forward. Our target there is to get all that financing in place by the end of next year. And in Zambia, it'll just be step through as we get stuff on the feasibility study. We will do some more work on our other project at Falea Exploration. We'll look at doing some IP work there. The recent drilling client just showed us how better to target our exploration up there to continue to look for uranium. So expect to see some announcements on that as well.
Brilliant. Daniel, thank you for your time.
Thank you very much.